Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, July 23rd, 2018. I hope everybody had a great weekend. I was away from my desk on Friday and today, out of town over the weekend, but home now, and we'll catch up on all the trading room, any trading room requests, chart requests, questions, anything you sent. If anybody has sent a question via the contact form, I should get back to those and have be on top of everything by tomorrow morning lunchtime latest. So thank you for your patience on that. As far as an update, I want to just go over a little bit of everything. I don't want to go into too much detail on any one thing, but I wanted to touch on like some commodities, gold, oil, the broad markets, and maybe a couple trade ideas here, and try to wrap it all into one video. So again, not going deep into any one sector or the markets or anything like that today. There's really actually not much to report in the broad markets. Today we were up 0.32%, so we essentially went nowhere. And most certainly there weren't any significant technical developments. And that's again what I expected. As we head into this is probably the heaviest earnings week of the season, undoubtedly so far. And so the market's been in somewhat of a holding pattern. And again, that's been my expectation. So I point out these wedges, but I've been saying don't expect fireworks until we get some of these big market moving companies out of the way. We're just probably going to continue to kind of grind around the holding pattern. Alphabet reported today after the bell and had a pop, so the Qs popped a little bit. If the after hour gains hold, it looks like the Qs closed at 180.78, which is right up here around the top of the wedge. Still very much keeps these negative divergences intact. So again, from a technical picture, and assuming that we open where the Qs closed in after hours today, which we're not going to open exactly there. It'll be above or below. Nothing has changed. It'll just be, extension of these divergences that have been building, and we'll just have to go from there. If anything does change, anything technically significant, bullish or bearish, I'll let you know. But really from this chart, what could change? There's a lot of things, but a couple things. S1, that means support one, first support level, and then T2, T1 zone. So that's my first target zone down here. And what would help the bullish case? Well, we held that so far the PPO, that 9 EMA, the signal line, is back testing that zero line from above. That's something to watch. Use that as a trend indicator when it is above, like it was here. You can see back test, back test, back test, back test, back test, stayed above and finally crossed bearish right here, and that was your sell signal. So it told you at this point in time the trend was bullish, and it still is right now, although we've had this breakdown here. So I expect it to cross back down, but we could most certainly have another pop up here, and again, still keep these divergences intact, maybe push a little higher in the markets before we roll over. So that's still my expectation, and we'll just see where things go this week. If they burn through the divergences, if anything changes technically, again, I'll try to communicate that as soon as possible. On a related note, the SQQ short trade, they're going to give it a run for its money tomorrow. Again, if these after-hour gains and the Qs hold, I'm showing SQQ closed in the after-hour session at 12:24. However, it closed the day here. You can see at 12:52. And if you're in this one, the suggested stop is on a daily close below 1220. So as of now, we're fine. Even if we open below 1220 tomorrow, it's right up. What I do when I'm using a stop on a daily close at 3:59 as we're heading into the final minutes or the final seconds of trading. If it looks like we're going to get us definitely close below that level, let it go. We can always get back in. And again, that's you may have a different suggested stop or a different personal stop that you're using, but I'll leave this one on for now, and I still think it looks good. Maybe wait and see what happens tomorrow. If you haven't taken this trade yet, might want to see how the day finishes before adding, but I just wanted to update that trade, and nothing has changed technically, so we're haven't hit the first target yet, or did we? Yeah, it looks like maybe we did there. I'll have to update that. Again, I was gone Friday and Monday, so my apologies. I had very limited time in front of the computer. That's SQQQ. We already looked at SPY. Let's look at IWM. That's also an active trade, also an active short trade, and it's also still in play. This one, oh, I forget where we shorted exactly, somewhere here, maybe on the break of that trend line. We hit our first target back here. First target was hit. We had a little divergence there at that low. We bounced. And again, like the broad market, everything else, we're sort of in this holding pattern here. So I'm I think it's if you take a trade and you have a trading plan, unless anything significantly changes, stick with that plan. And on this one, there's our stop 170.40. And here's T2 and T3 for those of you that didn't book profits at T1. So that's IWM. I want to run through the 11 sectors of the S&P, and I'll do this very quickly. There's actually only the one that I'm still, I covered this in a video a week or so ago. One of the more bullish sectors or trade ideas that were out there at the time and it was XLF, and still is. This one is the only one I'm looking at. The had this nice divergent low right here on the daily time frame, and those I really like to see divergent highs and lows on the daily time frame. Those set up swing trades. So, and it has been playing out. This one's been up, almost every day since then. We've had a couple red days, very little, and we're above this trend line now. But it does have significant resistance up here, and I'll tell you, and I'd like to go through this right now, go through the other sectors real quick, tell you what I'm seeing. But again, this is my favorite. If I had to be long any one sector right now, this would be it. There may be a little more upside. It's about 14% weighting in the S&P 500, so it's an important sector. There's some out there that have a much lower weighting, so therefore it doesn't really matter much what they're doing. But this is one of those. And of course, the big dog is XLK. Even in the S&P 500, it's by far the heaviest sector weighting, and much even double that in more than double that in the QQQ Nasdaq 100. And there it is. It continues to just move up. Tech is bulletproof. This is another, I don't want to call it a tech bubble like 2000, because back then, the dot-com bubble, the dot-com companies didn't have any earnings or even earning prospects. This time around, it is earnings driven, these big behemoth, but it's only a handful of companies, and that's the unhealthy part about this time around. But from a technical perspective, we have another divergent high. We've had these divergent highs. Every one in the last few years, without fail, has played out for a correction. Some of those were measured in double digits. There's no reason to think this one's going to be any different. Right here, DH, divergent high. So here's your divergence. You can draw it back from really consecutive divergence back from this point here, this high, or you can even look at and to do that, by the way, I just simply extend the trend line over here like this. But I also you can even look at this as a separate divergent high at this point in time, and you can see things starting to roll over, but we don't have a bearish cross yet in the PPO. If we do get it, that will further increase the odds of a correction, but as of now, this is a divergence line, so it can extend. We can pop up a little bit. There's certainly room for it to do that. And so therefore, near term, certainly the near term momentum is upward and the intermediate term, but these divergences building still warn of an impending trend change. And again, being that this is by far the largest weighting in the S&P 500 and even more so in the NASDAQ 100, it will have an impact on the market if these divergences play out. And I'm talking about the S&P 500, the stock market. Something else that I've noted, let me just put up something here. I'm looking at the PPO, and as I just showed you here, the PPO is starting to roll over. You can see that on this. Now, the PPO is a momentum indicator. It's very close, almost its close cousin is the MACD. You can use the MACD. You'll probably see almost the same thing when you put that up. And these momentum indicators, when the momentum starts to wane and slow, you get these, eventually these indicators turn down, you get a bearish crossover. And if you just go back in time, especially the easy way to see that, if you put up a histogram, you can do it on the MACD or on the PPO. And that shows you where the crossovers occur. And when these lines go from red to green, right here, that's a bullish crossover. And when they go from green to red, that means the lines have made a bearish cross. So you can see the momentum is waning. You can also use histograms to draw out the same type of divergences, bullish and bearish, that you do on the PPO lines. So XLK, here's where I'm going with this, is the only one you can see these histograms, although it is rolling over, and that's something to note because we may get a bearish cross soon, they're still well into the green. But when I go through the other sectors, there's XLF. And I just told you XLF is my of the sectors out there, the most bullish in my opinion, and that one's healthy right now, not even close to making a bearish cross. Although it is testing that zero line from below, there's another thing to look at. I don't want to give you too much here, but the trend has been bearish since it crossed below the zero line here, and now it's back testing it from above. So these divergences could be a big kind of call it a bull trap, so to speak, but maybe if sucks in a lot of longs here and we get a rejection there, because that does a pretty good job of defining the trend. Now, Let's just move on to the rest of the sectors and I'll fly through these. XLV, pardon me because I have different boards. These a lot of lines, so don't pay too much attention to price. But look at the momentum in the here, the momentum indicators, PPO curling over, about to make a bearish cross, and that's further evidenced by the fact you can see the histogram now at 0.05 about to cross down. And so where I'm going with this is I'm seeing every other sector right now besides technology and financials, and there's 11 of them total sectors in the S&P 500, same story. PPO recently made a bullish cross, but all of a sudden it's turning back down quick. About to right there, it actually just made a bearish cross here on XLY, consumer discretionary, and this is a big sector. This has been one of the strongest sectors. And by the way, this one, XLY, the consumer discretionary ETF, there is a almost a 25% weighting in Amazon. Amazon is by far, without even a close second, the largest component of this ETF right here. And this is a 12.6% weighting, this sector in the S&P. Amazon, if I had to put my money down on any of the FANG stocks, and we've already had two, when I say FANG, I'm talking FAAMG, those are the five I follow. If I had to put my money on which one's going to disappoint to the downside, it's going to be Amazon, both on the chart, this chart, Amazon's chart. It's overloved right now, Amazon Prime Day, all that good stuff. I think that stock is probably going to be the one that disappoints. So far, we've had two, Microsoft and Alphabet, beat expectations or at least rallied afterwards. But there it is. I wanted to point that out because this is an important sector and that's a pretty decent weighting in the S&P 500. There it is. Just recently made a bearish cross on the PPO, confirming the negative divergence. You have that clear wedge up there. Let's continue on a couple more. There it is, XLRE. This is the REIT, real estate ETF. We've already made a bearish crossover. And again, right now, guys, I'm just focusing on this PPO, looking at the momentum and seeing that a lot of these sectors, in fact, 9 out of the 11 are looking this way. Let's see, this is XLE Energy. There it is, recently made a bearish crossover. You know my thoughts on crude. I'll get to that in a second in these charts. This is XLB Basic Materials, recently made a bearish crossover there on the PPO. XLP Consumer Staples. That one I had been bullish on here, and we got a pretty good run, and we're up to where I think the end of the run. This is all I was looking for. At least it more than meets this wedge measurement. You can see I'm referring to the breakout from right here, and you have a lot of resistance. I'm circling all these reactions or highlighting those, and that's where we're at. So we're at resistance, overbought. We had negative divergence here, and now the PPO has crossed, made a bearish cross. Yeah, we're a little whipsaw signal there, but you can see we've been diverging as we moved higher. So that's it. Let's see. I had two more. I have to cover. XLI Industrials looks a little bit better. You can see that. I should point that out. There's a pretty, no chance of a bearish crossover right now, but still down below trend. And like almost every other sector too, by the way, this one topped early in the year back in January. And that's the other thing. We're seeing fewer and fewer things, mainly those tech stocks. That's it. Now, and there's some other things out there, but it's largely those FANG stocks that have been lifting the market. And as far as sectors go, technology. Financials look good now, but they're still well off their highs as just about every other sector. Here's utilities, and there it is, recently made a bearish cross. So that's it. I think I covered the 11 sectors. Nope, telecom. Telecom also recently made a bearish crossover, and I highlighted this in the recent sector video. When I covered the 11 sectors of the S&P 500, there's a multi-year, about a year and a half, almost 2-year sideways trading range in telecom with a lot of failures right here. This is the top of the range. We had a lot of failures there. We finally broke out, and as I mentioned, that was on a divergent high. And I said, when you have a breakout with a divergent high, it greatly increases the odds that breakout will fail. Well, what that is, that's exactly what happened. This is what we call a bear trap. I'm sorry, take that back, a bull trap. A bull trap is a breakout. You get a lot of people pile in, buying the new highs in telecom, the breakout to new highs, breakout above a multi-year trading range, which should be very bullish when you finally have the energy to power through there and take that out with conviction. We were traded a few days above it. But what happens, and I say this often, fewer things in investing and trading are more bearish than a failed long side breakout. And you can see how impulsive that selling is. Once that breakout failed, you can see it's been falling and gapping down every day. That's a pretty big move over the last week or so in telecom. And again, so what I just did is went over the 11 sectors, and there's a handful, you can call it industrials, tech, and tech starting to roll over, and financials. Everything else looks to be headed lower. The momentum is lower. That trend, the momentum indicators are pointing lower right now. Okay, let's just look at a few commodities and we'll wrap it up. USO, this is a daily chart. We had a divergent high here, big correction, divergent high there, another divergent high. So far, we've been correcting. This was a very well-defined or fairly well-defined trend line at this point. We broke down below it, regained it, but now we're back, and it's still coming into play because that's so far capped this rally. You can see that big red candle right there. We've been back testing it in a red candle. And I think I already gave you last week my bounce zones. This is USO. This yellow box right here is my bounce target zone. I pointed out this divergent low. It showed a little better on crude futures because you had both the PPO and the RSI showing you that bullish divergence. But either way, you can see it here. And you can also see there was that rally I was looking for. And 1428 to 1467, that's about my bounce range. We popped right above the bottom part and rolled over so far. So, and you can also see there's that PPO signal line, the 9 EMA right there, the white line, which in this case is a dotted line or dash line, being rejected right on a back test of the zero line. Again, the blue line got a little bit above. I don't use the blue line. That's the PPO line. That's the first of the two to cross. I like to use a 9 EMA because it's the last two across. And if you do that, it helps filter out whipsaw signals. Boom. So we're rolling over. You can see the PPO rolling over right at the zero line there as the 9 EMA comes to back test it. So, yeah, if you were able to get a bounce out of USO, great. It was a nice trade to be made in crude or whatever, quick trade, but I think the end might be here, or may have ended yesterday or whenever that was. Today, yesterday. Again, so was away from my desk. So let's look at crude futures. All right, here's crude futures, and these were my bounce target zone right here, or three targets, I should say. So we'll call that the bounce target zone. About what is that, 68.69 up to 70.43. So we got a little shy of the halfway point there, and so far have reversed today. There's that divergent low I was talking about, but more importantly, it came on after that bigger, larger divergent high. So this was what I was looking at as a counter trend rally, and that could be it. And we could be headed lower now in crude. And where that's important is crude will dictate where the energy sector goes. Not the biggest sector. It used to be much larger, still about over 6% or so. And here's that divergent high right here. This is XLE again, energy. And remember, I posted this the other day. Chevron and ExxonMobil make up the bulk of XLE, of the energy sector. They're that big. XOM is a $347.2 billion company. Chevron Texaco is $232.5 billion. And the next one down in XLE is Schlumberger at $92.7 billion. So you can see these are by far those two, and they both report later this week, and so that may set the stage for what's going to happen next. You can see the energy sector here after this divergent high sort of holding support right about here. It's a little bit sloppy. These guys trade. There's a lot of volatility in the energy sector, but right there, so really the nail in the coffin, or the level, look at around 73.80 or so. If you see that go with conviction, there's really not a lot of support if XLE gives way down here to at least 70, about the 70-ish level, maybe even lower than that. So that's something to watch for in the energy sector. But again, if the charts of USO continue to play out the way I expect they will in the coming months with more downside, you're going to see more downside here in the energy sector as well. Gold, I'm still watching. Yeah, I've been talking about gold for a while. I keep an eye on it at all times, and I'm waiting to pull the trigger. There's just something, and it may come out of nowhere. I've come close in the last few weeks here to adding that in as official long trade idea, and even going long gold. But and I do actually have a position in the miners. It's a small position, and I plan to add to it, and I plan to add that as an official trade idea as well, either gold directly or GDX. And I think it's probably pounding out a bottom here, at least a tradable bottom. We still have that positive divergence I recently pointed out, but I just need to see a little more evidence with these candlestick patterns. There I can't rule out a move down here, and if it gets here, let me tell you this right now, if it gets here soon, that 113.95 level, I'll turn that up for you, that's a pretty important support level, and I think that would offer us a very good buying op. Excuse me, if the charts confirm at the time, that is a level that has capped a lot of these pullbacks since this bull market in gold began, especially back here in 2017. That was a floor, and we haven't revisited that level since then. So this would be the first tag. Maybe we pierce a little below it, maybe we reverse a little above it, but I think that's good for at least a tradable bounce, especially with how oversold gold is and with these divergences. So again, I think gold's setting up. And I don't want to go off topic now. I usually cover US dollar and euro and all that. There's just not enough time in this video. And just remember, GDX will follow. When you look at the chart of GDX, it doesn't look like much here. Again, this is just here it is. I mean, if I extend that box I had there was a bottom of the trading range, and there's those same lows from back in 2017 I just talked about with gold. You had the same lows here on GDX, and actually GDX revisited and retested those lows back in early 2018. So if it gets down there along with gold, it's trading 101. I can't promise you that a long on GDX will pan out, but I can promise you it's objective, because in trading 101, you buy pullbacks to support, or go long on a breakout above resistance. In other words, the top of this zone. So this is a pullback to support. You buy, go long there with the stop not too far below, so your downside's minimal. And if GDX happens to reverse, my minimum target would be right here. If I draw a line, it's about $23. That would be my minimum swing target right there, and that's a pretty good move in GDX. Bitcoin, highlighted, mentioned this one recently, most so in the trading room. I think I covered a video on the front page recently as well. 7,000 was a pretty important level right there, that 7,000 level. And you can see we had a lot of reactions there, And we broke out, big impulsive move. And we also had a level up here, about 7,200. That one was taken out as well. We are now diverging. This is something to note. We have negative divergence. This doesn't have to play out, but it is something to maybe say, hey, in the near term, this was a pretty big move. We might need to digest these gains. So I wouldn't be chasing Bitcoin right here. And by the way, guys, this is GXBT. These are Bitcoin futures. These trade, I believe they're dollar for dollar, so one contract's going to cost you $7,745 or so, or 755. But if we get a pullback to that 7,200 level, that might provide us an objective entry. And then there's a couple proxies that I've shared in the trading room recently and in the past. Overstock had a down day today, broke this little minor trend line here, and it has this resistance area. It was also a target zone from this recent divergent low. So it needs to really get above that 41.90, call it $42 level, and it's going to take Bitcoin moving up to do so, most likely. This one trades largely in line with Bitcoin, and so maybe a pullback. And I can tell you, if Bitcoin pulls back to that the objective buy level I just showed you there on that chart, you get a pullback here to overstock anywhere close to that $31 level. That's pretty decent support. We'll move it up here, call it even 32.40. Yeah, let's say there, somewhere around there. That might provide an objective long entry again if the charts confirm with Bitcoin, and we might be able to swing this one up to about $48 or so. And then Riot actually followed through today. I pointed out Riot. This is another proxy for trading Bitcoin, Riot blockchain. And you have the divergent low right here. You had a big pop, a 45% gain last week. And then I mentioned in the trading room or in the last video, can't recall, that it was setting up in this flagging type action. And it's moving out of that flag so far. It was up about 11, almost 12% today. Sounds like a lot, but it's really par for the course on this stock, to be honest with you. When this thing moves, it moves pretty big, double digits, and that cuts both ways, both the upside and downside. So it needs to take out this level here. There's some resistance around 680. And again, I don't think that flag will completely play out to the measured target without Bitcoin continuing to rally. It is possible, but it's doubtful. And if it does play out, there's your measured target right here. Actually, I should probably do, there's your measured target. That should take it up to about $8. So if you're looking for a target, and if you want to just have some faith, if you're long this one, set a stop somewhere, a trailing stop or a stop there and let it ride. This one very well could go up to 8 before it corrects, even if Bitcoin just holds up. Sometimes this thing, when it gets some momentum traders in there, this thing can run. So there it is, 783 is where I had that on the daily chart. I just showed you $8-ish on the 60-minute chart. And I certainly see the potential, if Bitcoin continues to firm up, for this one to go all the way up to 960. And that's a big move from even where we're at now, 659, especially from where we were at just last week with that divergent low. So there's a riot. Okay, and let's just wrap this video up with a quick look at commodities. I'm not going to go through all the commodities, just I flagged a few before the video that stood out, and these are some of the ones, or all of the ones I think, not all of them. Some of the ones that I highlighted in the video a few weeks ago. I did maybe 2 weeks ago of a commodity video, and some of the ones that I like that look like potential bottoming plays are Cane. I still like it. Cane really hasn't taken off yet, but I see a nice divergent low. I'm looking at the PPO. You can see that just poised right now. Maybe it made it today. I can put up the histogram. Doesn't matter really. You don't split hairs, but nope, close to it. The histogram's still red. But what I'm referring to is this one is poised to make a bullish crossover on the PPO that will confirm this positive divergence. You already have the divergence here on the RSI, and boom. Cane, I don't see this one blinking till it gets to 738. And from 704, it's a decent move. It doesn't sound like much. You're talking, a quarter or so, but that's 5%. And then if it clears that level, might be a little hiccup along the way here, about 780, and then maybe work its way up to 815. And there's also the potential, by the way, for a bottoming play in a lot of these commodities, including sugar. When I look at the longer term charts, which I'm not doing here, these are just daily charts. Corn, I mentioned that one the other day as an oversold bounce trade, or at least a couple weeks ago whenever I did that last video, and it's moved up nice. It's already had a nice pop, about 4% or so, coming up to some resistance, those previous reaction lows over there. This is just that's an old stop from a previous trade. Looks like that one hit that first target there instead of being stopped out. But there it is. So there's your previous reaction low. Let me give you a line there. That's what you might want to look at. And if it can take out that level, 1654 with conviction, it could keep going, but this one may need another low. I love to see bullish divergence at a low, but that is absolutely not a necessity. I can tell you this one's overbought, coming off overbought levels. So again, there might be some more upside, but it is approaching resistance now. If you're long, it's not objective to go long here. It's had a quick run. You may want to either tighten stops, take profits at 1654, or wait for it to pop above that level with conviction before taking a position. I remain bearish and have been for months now on timber, showing you these divergent highs on cut and wood. These are two timber ETFs. They hold lumber, or timber companies, timber and forestry. There it is. This one had this little channel here. It broke down recently. I don't see this one's, any significant rallies until it gets down to at least 30.43. So I still see more downside in cut. There's DBA, this is agricultural ETF, divergent low. This one looks good too, is another potential bottoming play here. Coming off oversold levels, making a bullish crossover here on the PPO. And JJOFF, this is the coffee ETN. Here's a downtrend line to watch. This forms a wedge type pattern. You have a divergent low right here. You're oversold recently. Actually, you can draw a little small divergence right here. And boom, this one, if it pops above there, probably take you up here at about that 1380 level, and possibly beyond, maybe around 1490. And again, maybe a potential bottoming play with a lot more when I look at the long-term chart of coffee. So if you're patient, you want to start scaling in, this one could be, you know, um, you know, $20 in the next year or two easily. KOL, coal ETF. Nope, that's it. Why did I flag that one? Didn't mean to flag that one. There's another sugar ETN, SGGFF, same story, divergent low. I already covered that. UNG, no. I guess I had a lot of these flagged. I didn't mean to have flagged. I thought I cleared those flags out. Wheat, I mentioned that one. 612 was at support a couple weeks ago. Oversold. It's moved up at resistance now, but it may continue on. This one has some potential here. It may have already bottomed back in December of 17. May want to work its way all the way up here to $7. And then the other, we'll wrap it up here with wood. Wood is the other timber ETF out there, and there was divergent high, and this one's playing out. It broke. This was my preferred shorting proxy for the timber. You had this multi-year trend line that even goes back to the left of the chart, all the way back to early 2016. Very well defined uptrend line, divergent high, breakdown, back test just below the primary trend line, and now it's rolling over. So that's consolidation flagging type action. I don't see this one really having much of a counter trend bounce until it gets to 71.14 or so. That would be my next stop. And there's a support zone there, and I think ultimately probably continues on down to about 63, 63 and a quarter. All right, this has been Randy Finney with the right side of the chart. Let's just, oh, wait, before I wrap this up, as I looked at that, I do want to say that this one is starting to set up this potential divergence right here. I should have made mention because I just told you I didn't see anything stopping it till it gets down to 71.14. But I do see a potential divergent low or potential bullish divergence forming here, something to monitor. Now, however, if it means if it gets there down to 71 and change, we might be able to have a bounce trade if these divergences are confirmed, and I'll have to take a look at the 60-minute charts as well. So that's that. Those are some of the things I'm watching, and again, long video, but I just wanted to get it all in there for you, and we'll see what happens the rest of the week. Just hang tight. Remember, we're going to see probably some increased volatility this week as these big earnings announcements report, the big companies report. And I think as we head into the close Friday, we'll have a good idea whether or not those divergences, those negative divergences on the 60-minute time frames on the broad markets are going to play out or not. All right. Have a great evening.